Hi guys, hope you're all well. Just thought I'd upload a quick video to detail a trading stroke investment strategy that I myself have been using in recent years with a view to planning for my own retirement. Anyway, without further ado, let's just get into the nitty-gritty of this because I don't want this to drag on for too long. At the top left of the screen you can see a few comparisons here. So you've got the standard buy and hold portfolio. You've got a best 6 months strategy, and you've got the best 6 months improved strategy, and the last column is the strategy that I'm wanting to explain to you guys today. The best 6 months strategy is a strategy that has been detailed in the Stock Market Almanac for the last at least 15 years, probably a little bit longer, and that indicates or highlights the fact that the months of November through to April every year are some of the best for the stock market, and in fact the other 6 months the results are close to break even. So the crux of this strategy is effectively to leverage that. So as you can see down the bottom left, that's effectively the best 6 month strategy. As I said, if the month is either anything from November through to April, then we're going to be 100% long for that period. Now, the improvements that I've discovered and have started using myself are detailed on the bottom right. So basically, if the months are November through to April, yep, we're still going to be long. However, for the months of May through to October, there's a slight tweak here. Now, in the best 6 month strategy, we would normally go to cash. However, in this strategy, what we're going to do is we're going to incorporate some degree of relative strength. So if at the end of a month from May through to October, if the closing price for that month is higher than the price was higher than the price 12 months ago, then we were going to be long for the following month. So let's say we got to September 2015, and normally at the end of September we'd be in cash for October. However, if September 2015 closed higher than September 2014, then we would actually be fully invested as per normal. Now, on the top right, you can see the equity curves of these various strategies. So buy and hold is the green line, which happens to fall quite happily in the middle here. And as you can see, there's some fairly deep swings. The blue line is the best 6 month strategy, and as you can see, that's a fairly low variance strategy, but unfortunately it does actually return less than buy and hold. Now, the improved strategy that I've just outlined, as you can see, actually it crushes the pair of them, in fact. Now, if you look at the top left, you can actually see that the improved strategy that I've outlined actually returns 8.03% on average from January 1970 through to December last year. That's about 68 basis points higher than buy and hold, and is significantly higher than the best 6 month strategy. What is also interesting, though, is that not only does it generate a better return, but if you actually look at the maximum drawdown, the drawdown is comparable to the best 6 month strategy, but it is 60% of the buy and hold. And the monthly standard deviation of these returns is far, far less. As you can see, just 3.9% is the average standard deviation, as opposed to 4.42 for buy and holding regardless. Now, obviously, this is highly impressive, and I know 65 basis points, 0.65% doesn't sound like an awful lot, but as you can see, over 44 years compounded, £10,000 or dollars, whatever you will, under buy and hold would have come to 243,000. That same 10,000, with this slight tweak to the strategy, would have come to 322,000. So that's almost 50% more just for a tiny, less than 1% increase annually. So it's something to digest. Have a bit of a think about this. By all means, test this for yourself, because don't just take my word for it, because I'm not a financial advisor, but it's just something that I've found useful, and I thought you guys might too. So if you have any comments, thoughts, opinions, or whatever, don't forget to comment, like, or subscribe. Thanks a lot, guys. Take care.